Okay, folks, welcome to Sunday Night Futures Live. I hope everybody had a great weekend. Welcome and thank you for being here. And yes, I know I need a haircut. I haven't been able to get in contact with my barber. He's very, very good. I don't go to anybody else. So, yes, I'm aware that my haircut needs to have occurred last week. Okay, so let's get to it. We have the opening futures action here, and we have the E-minis, which are opening down fractionally. There's only a 5-minute chart. I'm not seeing a ton of volume here, but net, pure selling. It appears as though we have a new contract, which is open up on the E-minis. That could be creating some volatility. Let's let this settle down. Let's go to comments. Let's say hello to folks. All right, we have Lee Cable. Welcome, my friend. Tim, even Bob, just a heads up. Sometimes when there are a lot of stock requests, some of them, yes, I see that. I did, as a matter, just so everybody understands what Lee Cable is talking about. I'm sure Tim, not Lee Cable, is this here. Our chart requests. I did open it up. I'll refresh this before we start doing them, just in case we have any last minute requests. So thank you for that. Yes, I'm aware. I appreciate it. Sometimes I do not check, and I have missed people. But again, thank you. Franklin, welcome, sir. Welcome. Larry, I was thinking about you. I was watching Larry lives down in Kentucky. He's a horse racing fan. And I was watching a Netflix series on regarding horse racing, and in particular the Kentucky Derby and the Triple Crown. It was actually pretty good. I enjoyed it. So I thought of you, Larry. The market is dangerously complacent right now. We will be talking about that quite a bit tonight. We are facing a major sell-off, August 1st or sooner. Trump ain't backing down this time. What the pin will be, I don't know. But you are accurate. It's different this time in that we're in an everything bubble. I think ultimately, whatever is the catalyst to send the 10-year, 20-year, 30-year bond yields up higher will catch the blame for whatever sell-off we get here. So I agree 1,000%. We're going to be talking about valuations quite a bit tonight. We do that normally, but I mean, folks, I did a video yesterday about AppLovin. Now, this is not an investment. It's an expensive stock. Do I like the setup? Do I think that it may rally from here? Yeah, I do. Because the market is going up. I'm just playing the momentum game. I would not invest really anything right now because I'm concerned about the valuations of the market. And I got a couple of thumbs down. Just the ratio on that video was not great. People don't want to hear bad news, but that's my job. That's my job. I'm not CNBC. I'm not going to speak my book. We're going to say it straight here. That's what we do. So, yes, thank you, Larry. Talon, the man, the mission. Hey, Bob, do you think that Netflix earnings is a sign of things to come? Great point. A really, really good point. So for those not familiar, Netflix had reported earnings, and they were good. They were good earnings. The problem is the stock sold off. So sometimes the market gives us a tell, a sign, a signal. When you see a stock that has every reason to go up or down and it doesn't, it takes the opposite direction, guess what? That's a change in sentiment. So heed the warnings of the market. If we're not going to do that, we have no business doing what we're doing. Zero. Invest in mutual funds, do something else, play golf. Don't trade stocks. So yes, great point, Talon. I agree with you 1,000%. We're talking about one stock here, lofty valuations. What we want to look for now is a trend. Do we see more of this type of behavior? Because it's not going to take long for the markets to catch the hint that, hey, Jesus Christ, great earnings, good looking forward guidance, and the stock went down. I mean, Do I want to chase a stock here? Do I even want to own stocks? It was just a reason to sell. I skipped a couple of people here, but Bob, have you looked at any of the Bitcoin miners? Oh, he did. I think it was last Sunday we went over. It was the prior Sunday. I did go over one of them, but I haven't. No, I'm not into the crypto miners per se. So no, to answer your question, if you have them in the forum, I'll go over them. If that's a chart request, I'll be more than happy to do that. Mr. Sean, welcome. I skipped you. My apologies. Paul, good evening to you, my friend. Lee Cable. Oh, man after my own heart tonight. How do you think the healthcare sector will fare through earnings and guidance season? Okay, so everybody knows that we have been trading the healthcare stocks for a couple of months now. We did very, very well on the dead cat bounce on UNH. We booked half profits. We're still long of an investment size position. We had a swing trade size position. We lightened up quite a bit. The stock broke 300. Thank God we were smaller. So the pullback here down below 300, not really bothering me much. I could always add back that other position. I think we're going to get a bottom probably this week on these names. There will be reporting earnings this week. I think CDC reports on Thursday, or is it CNC? CNC reports on Thursday. They have already pulled guidance. So when you have a company like MOH, which reduced guidance last week, I believe, CNC, which pulled guidance, UNH pulled guidance a while ago, it's priced in. These names are priced in. I mean, in the case of CNC, we'll go over that chart in a little while if I remember to do it. But the valuation is just ridiculous. I mean, it's trading down in the low single digits. So, you look at these charts and you have to say, how did Warren Buffett make his money? How did not every great investor, how did many great investors make their money? Well, they knew that when you had blood in the streets, you stepped in and you began bull operations and you held for the long term. And that's our plan with UNH, much as it was with Boeing. When Boeing was getting annihilated, what were we doing? We were buying it. Now we're up 50%. So right now, you are going to hear on these earnings calls out of these. I have an article, as a matter of fact, off of Zero Hedge. I have it up on my screen. You're going to hear them talk horribly about forward-looking guidance, if they even talk about it at all. That's how bad it's going to be. What do? You buy. Because health insurance companies cannot go out of business. It's an impossibility. It can never happen because the entire structure of the United States, our way of life would be disrupted. So either they're going to be handed a life preserver by the government, vis-a-vis Medicaid disbursements, Medicare disbursements. I don't know. I would certainly think that the fact that these hospitals no longer have to take care of so many illegal migrants, that would be a good thing. And maybe that's going to take some of the pressure off of the healthcare stocks. So I think we need to stop thinking about the blood in the streets and start looking at it as opportunity, not as a problem. We didn't own it up at the highs and failed to sell. We're just looking at blood in the streets and we're taking advantage of it, and we're doing quite well with it. And CNC, we're down on it right now, but we only have 20% of our allotted position. And as a matter of fact, as I'm talking bearish here, folks, in the link below on the video description area, I updated the downloadable support levels for the triple Qs if and when we go into a correction. So take advantage of it. It's the brand new revised version. The last one was from February. It's revised for July. And I don't know whether or not I answered that question appropriately. Let me just reread it. So I think you might see, even if they give a poor earnings guidance, you may get a dead cat bounce, a relief rally. Okay. Right now, the worst is being priced in institutional distribution. At some point in time, people are going to have to say, are they really going out of business? I don't think so. Tim, we took care of that. Hap love it. Welcome. Yes. Good looking chart. Good Bollinger Band squeeze setup. TF Hatter, welcome. Riot is the one. Thank you, Lee K. Riot was the one that we went over either last week or the week before. Lots of comments. Everybody's on fire tonight. I love this. Jesus, you guys are stealing my show. You're stealing my show. Healthcare stocks, valuations, everything I'm about to talk about, including insider selling, you guys are already on top of. It's amazing. I have a great group here. Awesome. Intelligent people. Bezos had to say, holy shit. That's so funny. I swear to God on my children, I was going to use that line. You just stole my line. Yes, Bezos is selling. We're going to go over the insider selling on TrendSpider in a moment. And it's exactly what I was going to say, was that he was selling for his wedding. Darn it. Corey, welcome. Looks like a change of the guards is coming. Staples, yes, Staples broke out last week. Very, very good breakout. And you'll remember early on in the year when we had that February sell-off, what did well? The only real sector that did well was Staples. TLT, the 20-year bond ETF, bonds in general, went down. Staples went up. Great point. Bob, are you aware that the big, beautiful bill that was passed affected the healthcare? Yes. That is why you're seeing it doesn't help, especially. So I did a little bit of research on this, and UNH does not have as much exposure to the Medicaid cuts. So UNH went down faster because they pulled guidance first. There was anticipation of what was going to be in the bill. Let's face it. These guys, UNH lobbyists, CNC lobbyists, MOH lobbyists, they were in the room when this bill was getting written. So the street knew what was going to be in this bill. Now, CNC and MOH, those names, they have more exposure to Medicaid. And that's why they are latecomers to the brutal beating that we're seeing in the sector. And I think that the only reason why you're seeing a sell-off now, a breakdown below 300 on the UNH, is because those names are withering on the vine. They're breaking down really, really hard, playing catch up with UNH. I think that these are all great opportunities. These companies are not going out of business anytime soon. They will be thrown a life preserver. That's just the way it's going to work. And in fact, they're gonna have to raise premiums. They're gonna have to do it. Unfortunately, who they're gonna have to raise premiums on is not Medicare, Medicaid. They can't do that, but they're gonna do it on our backs, unfortunately. So, as always the case, when you have a system that is based upon not necessarily merit, but based upon basically socialist programs, and I wouldn't even call Medicare a socialist program. And I was on, to be frank and open to everybody here, I was on Medicaid when I was a kid. I was on welfare as a kid. I had food stamps, but back then you didn't have a card. You had the shame of having to go to the store or go to school, and you had to rip it out of a pamphlet. It was called food stamps. That's exactly what it was. It was embarrassing. But the way these programs have grown, I did a search this time last week for how much Medicaid has grown in the state of New York only since I was on it in 1980, 1981. 600% increase in that program since then. So I am all for the social safety network. I am completely on board with it because I benefited from it, and we didn't abuse it. My mother went to school. She became a nurse's assistant, and she did well. Moved to Florida, did well. She thrived. But we have an abusive system right now, and that abuse is only getting worse. And I think the president's doing the right thing. He's cutting the funding, and the states are going to have to take a look at their their program and say, listen, we got to get some of these people off that are playing video games at home and eating cheese doodles and are ridiculously overweight, drinking Coca-Cola. I mean, go to work. It's time to go to work. My mother did it. I did it. TF Adam, thank you very much, sir. I appreciate that. It means a lot to me. You just made my Sunday night. Thank you. Tim, you're welcome. Yeah, it took me a little while to do that yesterday, a couple of glitches, but I'm glad. I hope it's helpful. I'll try to update that once a month. The lovely Jody. See, Jody's very, very important to this program because my demographic is like 95% male. So we have a lot of testosterone here, which is great. However, we need the soothing effects of some female estrogen here as well. So thank you, Jody. Lovely lady. Great to have you, as always. Lee Cable. Great community. Great comments. Good stuff. We're going to be, goddamn, another one who just stole my thunder. Yeah, we're going to be talking about this. Beware the deep state. They bite back. Lester, thanks for being here. Hello to you, sir. Thank you. Okay, let's get to it. So the futures have settled down here a bit. We are down only 0.04%. So we're unch on the E-minis. We can go either way. There's no volume here. Quiet night. Let's take a look at the NQ. This is the NASDAQ 100. Down only 0.05%. Let's take a moment here. Let's get off this 5-minute chart for a moment. Let's take a look at a 4-hour chart. So the grind is still clearly up here. Now, what we did on Thursday was that we broke through the upper band here in purple, the upper band of the rising uptrend channel. And as we did back here, we failed to hold that, and we'll retrace back down to this lower. We already did retrace back down to that lower band. The question is now, do we put in a lower high? And do we now take out the lows of the actually after hours on Friday? So we're actually down more significantly than where we closed the futures action on actually the normal trading day on Friday. We're actually down more than what's 0.08% here because we traded. Actually, no, I'm wrong here. We reversed off of that support level. I retract that. Forget what I just said. So let's create an alert. Let's just do below. I want to see if we get a lower high and a break to new lower lows. That's enough of the 4-hour chart. Let's move on here. There's no volume. Let's take a look at the small caps. That's the RTY. RTY down 0.04. I mean, this is a real quiet night here. We have the mid caps up fractionally. I want to take a look at the bond yield. New contract here. So we're flat at current on the 10-year. Volatility. Now, I want to talk a little bit about volatility because I was watching this on Thursday. A new contract had opened up last week. Did I type in? Yeah, I typed in the right symbol. Where are my annotations? Let's go to a 4-hour chart. Okay, so we had the new contract that opened up on Tuesday of last week, and they spiked it up, and all through the back half of the week, all we did was trade sideways. So to me, this chart here of this front month contract, this is not the index. This is just the front month contract. The index looks like death. It looks like it wants to move lower, which is bullish for the S&P 500. But this 4-hour chart here on the front month August contract looks like it wants to go up. So we may have some speculation here, insurance buying, and it's just not being reflected in the index yet. Let's take a look at, let's go to energy. You know what? I want to go to the dollar first. Dollar first. Dollar opening down fractionally here, like everything, a real quiet evening. I mean, typical summer's eve on a Sunday night. Not much happening here. Let's look at energy. Crude oil opening up 0.27%. Natural gas gapping down. This is not a great time of year seasonally for natural gas. It had a good week last week, but I think right now is a time where if you are looking to buy some natural gas, now is the time you want to do a little bit of nibbling on any pullbacks here. I wouldn't get big though. Let's take a look at commodities. Let's go to gold. Gold opening down here, 0.16%. I'm looking at this is a 4-hour chart on gold. I'm looking at a bull flag setup here on gold. So we may be down, but we are definitely not out. 5-minute chart. Yeah, nice little reversal bar here on gold. I'm not going to be the least bit surprised to wake up tomorrow morning and gold is up, especially if the dollar is down. Let's take a look at silver. Silver, very volatile, down 0.22%. Palladium, we're long of palladium. We have a lot of profits here. We did doing very, very well. The caveat to that is that we are up and into the third standard deviation Bollinger Band on a weekly chart, very extended, ripe for a pullback. We'll be looking for a bull flag setup. I'm not going to sell right now. I'll look to add more on an orderly pullback and a stair step. That orderly pullback, that bull flag setup, and then a breakout. We'll add more to palladium. What's PT platinum? PA platinum. No, that's palladium. What is now it's going to haunt me. I don't trade platinum. I just watch it. PL. Okay. So another commodity that had a great, oh, this is wrong. That's a stock. I need a backslash there. There we go. So we're seeing some weakness here on platinum as well, down 0.21%. Copper gapping down here, 0.75%. Let's take a look at the weekly chart of copper. Copper's been holding up really, really well. This may be an opportunity to buy copper. I mean, look at this breakout. We broke out the week of 7-7 out of this bull flag setup. Broke out last week. I'm a buyer here. Any pullback on copper, I'm a buyer. I would nibble at around 548, 550. And then on a continuation breakout, I would add more to my position. The trend is clear. It's defined. It is up. Bullish on copper, despite the fact it's trading down 0.75% at the open. This is the value of multi-time frame analysis. Let's take a peek. I'm going to go back to the weekly charts. We're going to stick with commodities for a moment. I want to take a look at agriculture and cattle, in particular cattle. Cattle breaking out here. This is a weekly chart again. We broke out the week of 7-7. Last week, we had a bullish reversal off of this breakout point. Cattle is going up, bullish. Pardon the pun. Not intended. I would like to take credit for that. Unintended pun. Let's take a look at ZW. That is wheat. Now, the ag space has been fairly weak, but we're coming into a seasonally strong period of time. Lots of consolidation here. Nice bullish reversal bar on the week last week on wheat. Good stuff. Strong support below. I think that it's going to be very, very tough for bears to break current support on wheat. I think the path of least resistance will soon change from sideways to up. Let's check out ZC. Corn, another one where we had a rough week the week prior. We broke support. Now, many times what will happen is that you get a rally. This just moved. I could have sworn it just moved. Oh, that was my cursor. When you break down and you get a rally back to prior support, many times, usually, it gets rejected, it fails, it breaks down to new lower lows. That didn't happen last week on corn. Corn, and you could buy this through an ETF. CORN, the symbol, go figure. Corn did a bullish reversal bar, recaptured support, closed at the highs of the week. Volume last week was good. I think corn is looking bullish here. Soybeans, not as bullish as wheat and corn, but looking interesting. What else did I not go over here? Did I go over everything? Silver I did. Copper I did. Crude we did. Bitcoin. Weekly chart of Bitcoin. Let's go to the 15-minute chart, see what it's doing. A little bit of weakness here on Bitcoin, but could be a reversal happening on a 15-minute chart. I want to know if we take out prior highs. Let's go to a 4-hour chart. Yeah, we have a base that's building here. Let's just do this. You have a nice wedge formation forming on Bitcoin. The trend is up. Therefore, the probability that we break out is pretty strong. We didn't go over euro. Euro opening up off of its highs, though. Yen. A lot of this rally that we've seen in the past few weeks has been due to the fact that the yen has been really weak. Here's a weekly chart. You can see that we even broke support last week. This is current week, and we're doing a check back. The yen has broken support, allowing for the yen carry trade to continue. Let's go to comments. I grew up with a brother and a bunch of boy cousins. There you go. There you go. You know how to manage through. Paco Rios Guillen. That's a great name. What about UNH? We're going to go over UNH in a little while. We already spoke about it. Yeah. Jody is one of our cool ladies. All right. I think we covered pretty much all we want to talk about. Japanese yen, nice gap up here. New contract, though. We make it a continuation move up higher here on the Japanese yen. Interesting. Okay. Let's talk about economic data coming out next week, Monday. Leading economic indicators. They expect a negative read. If it comes out worse than expected, then the probability of an interest rate cut goes up higher. Right now, what we're looking at is no move on a July meeting. September, 60. This is actually higher. This moved up. This is about 50% the other day. October back above 80. Something happened here over the weekend. A little bit more optimism in terms of a Fed rate cut going into September and October. Forget about July. On Tuesday, we get Jay Powell coming out. Wednesday, nada. Thursday, initial jobless claims. We get that every single week. Also, S&P Flash U.S. Services PMI, manufacturing PMI. And this is really important. This one on Friday, durable goods. There's a large pieces of equipment, washing machines, dryers. That could get impacted if the housing market slows down any further. So this report here, new home sales, could impact this one here. Let's talk about earnings. So on Monday, we don't get much on Mondays. Ryanair, great airline over in Europe. I fly it all the time. Verizon comes out. Domino's comes out. Tuesday, this is where it all kicks off for the week, is Lockheed Martin, Coca-Cola. Coca-Cola USA is going from high fructose corn syrup to cane syrup, cane sugar, like they have over down in Mexico and over in Europe. Finally, Philip Morris comes out. D.R. Horton, home builder. General Motors comes out. A lot of military name comes out this. A lot of military names come out this week. Lockheed Martin, RTX, Northrop Grumman. After the close Tuesday, we get Intuitive Surgical, Enphase, Texas Instrument. That's going to be a biggie. Karu, software sector for mid-cap name. Great company. Wednesday, before the bell, Freeport McMoran. We're going to get earnings out of a lot of the gold mining stocks, silver mining stocks this week. Watch those names. AT&T, Fiserv, we own it. We have a small position, not a big one, but we're long of it. It's been beaten up. We'll see what happens there. Another defense contractor, General Dynamics. Tesla, Wednesday. Alphabet. This is all after the close. IBM, Chipotle, big Wednesday this week. Before the bell Thursday, we get American Airlines, Blackstone Group, Union Pacific Railroad, NASDAQ, Honeywell. After the close, Intel, not what it used to be. I mean, man, 15 years ago, Intel reported. Everybody watched that report. Now, nobody cares. Newmont Mining, Deckers, great company. And on Thursday, we get Centene, CNC. That's the healthcare stock I was talking about a little while ago. Another healthcare stock coming out, HCA. There's probably more coming out on Friday and next week that is not on this chart. So keep an eye on the earnings dates for these names. I don't expect a lot of downside here if they disappoint. It's expected. Let's talk about the Shiller PE ratio, also known as the CAPE ratio. Two different ways of looking at it. Charles Bellio looks at it the way I do. He's looking at it from a historical perspective. We are on the verge of taking out, we're only a couple of basis points away from taking out the 2021 highs. Ridiculously overvalued, folks. Buffett indicator, 200% overvalued relative to GDP. We're actually off that high. I don't know why this still says 200%. We're about 170%. Still extremely overvalued. And to keep in mind, this is a rear view mirror look at the valuation. What's been reported? Same thing here with the Shiller PE ratio. What's been reported? Now, when you take a look at the forward-looking expectations, the forward 12-month PE ratio for the SPX is 22.2, which is above the 5-year and the 10-year moving averages. Expensive on a forward-looking basis. So it was asked earlier about why would Netflix sell off if they reported great earnings or good earnings and good forward-looking guidance. It's already priced in. It's expensive. It's profit-taking. All right, so that's what's going on next week. This is the current state of our market, and I think that there is going to be an event that takes place, and it's going to cause longer-term yields to spike up higher. And with that, you're going to get a steepening of the yield curve. I'll bring that up in a moment. I want to bring up a chart of the 10-year yield first. Here. Folks, this is not a daily chart. It is not a weekly chart. It's not a monthly chart. It's not a quarterly chart. This is a yearly chart of the 10-year yield. The bond market rally, which began when I left high school back in the early 80s, that was the beginning of that bull market, ended here. Actually, that was where, sorry, I'm thinking about the opposite. The bull run in bonds began back here, a decline in bond yields, 1981. That ended here on this breakout to new higher highs, 2022. We have been in a bull market on longer term yields for now 1, 2, 3, 4 years. Even though we're down at current on the 10-year yield on the year, this is a very bullish setup. The probability of a continuation move higher is very, very strong. The question is, what's going to drive that? There's been a lot of speculation about the firing of Jay Powell. I'll tell you right now, a lot of people think that's just going to be bullish for stocks. I am not in that camp, because what you're going to see overnight is the lack of independence of the Federal Reserve goes away. Gone. History doesn't exist anymore. Even if they get him on malfeasance, or if they get him on the failure to manage the renovations of, and this is a real thing, failure to manage the renovations of the Fed building, which appears to be accurate. I mean, $2.5 billion to renovate that building. I mean, that's kind of nuts. But anyway, if they fire him for cause, that's just going to be deemed as a lack of independence on the part of the Federal Reserve. President Trump has already stated that he's going to bring in one of his own people, whether it be Bassett or somebody else, and they're going to push for rapid rate decreases. What is that going to do for longer term yields? Well, remember what happened earlier in 2024 when the Federal Reserve cut by 50 basis points, then by 25 basis points, then by 25 basis points again. Longer term yields did not go down. They went up. So if the Federal Reserve or the Jay Powell is fired, expect longer term yields to go up a lot, because bond buyers are going to think that we've lost our minds here in the United States. So this to me is my mechanism for what I'm viewing as a threat to the overall equity markets. If we get a breakout here on the 10-year, 30-year, 20-year bond prices, equity is going to have a very, very hard time. The question is, what's going to spark that fuse that drives this breakout out of this triangle formation on the 10-year yield? I don't know. I'm not that smart. Now, this has already been brought up. You know, there is a deep state. I think we can all agree upon that at this point in time. There is a deep state. And we now have 3 heads of the major intelligence agencies of the United States now under review for potential indictment, along with a former president of the United States in Pam Bondi's hands right now. The question is, does the deep state strike back? Do we get another COVID? I don't know. But you have a prior president of the United States squarely in the Russiagate crosshairs. And an indictment of him is not without precedence. What did they do to former President Donald Trump before he got reelected? They wanted to send him to Alcatraz forever. Forever. So this is huge. This is huge. Now, do they do anything with it? I don't know. I listened to Gabbard. She was asked by Maria Bartiromo, do we see indictments here? And her response was, I am not an attorney. So clearly this is a humiliation for Clapper, who was in charge of, I believe, the NSA, Comey, who was in charge of the FBI, and Brennan in charge of CIA. They have all been outed as being guilty, potentially, not even indicted yet, potentially guilty, along with President Barack Obama of treason and mind-blowing. This is General Mike Flynn. This is surreal. Here in America, the Director of National Intelligence, Gabbard, is now stating emphatically that a former president of the United States, Barack Obama, attempted a coup. She said this not once, but twice in an interview. I was floored when I first saw it. I had been using that phrase for years. Nobody wanted to use it. Now she's using it. You can go back, check my tweets going back several years. Coup. Attempted a coup against the president of the United States, Donald Trump. This is why Tulsi Gabbard was attacked so relentlessly over the past few weeks and months. They knew if they were anyone with the guts to investigate the attempted coup, it would be her. Well done. Bravo. I'm not a big fan of Tulsi Gabbard for some really left-wing positions, but on this, bravo. All right, to the story about healthcare. So this is going to be the salvation of the healthcare stocks. This may even cause them to catch a spike tomorrow. This is from a blog, so this is not really a syndicated article, so it may not get recognized, but they will make their money. They're going to do it. Unfortunately, it's going to be the productive citizen of the United States that's going to have to pick up the slack for those that do not produce. And this will be the salvation, along with some potential revisions to the law, the current law for Medicare and Medicaid reimbursement. But prices are going up for healthcare for everybody that is employed, everybody that is self-employed. It's going to happen. That's how they're going to get out of this mire. That's where the money is. Fed's balance sheet. Fed Chair Powell is not making any attempt whatsoever to make life easier for the president. They continue to roll off debt off of their balance sheet, not as aggressive as they were doing back here But clearly the trend is clear. It's defined. It's down. Okay. Folks, if you are not using TrendSpider, head on over. Link below. They have a 42% discount offer. I would go, this is only on the first invoice. So the value is on the yearly plan, not the monthly plan. So I would go yearly here. You know the value of it. I'll be demonstrating it in a little while if you don't. I can only give you a 35% discount. This is 42% off. Take advantage of it. Link below on YouTube. Link above on Twitter and Facebook. Let's get to it. Let's talk about NVIDIA up first. So without fail, what happens at market tops is that you get insider selling and you get a case in point back in, I believe it was just before the financial crisis, Blackstone, not BlackRock, Blackstone was a private entity. Just before the financial crisis, Schwartzman, their CEO, founder CEO, brought that company public and sold a ton of stock. Now, everybody knew that the mortgage resets were going to come. It was the most anticipated crash ever. And a lot of people still got hurt. I didn't. I did well with it. But you're going to see selling. It's just a marker of a bubble. And here, despite the fact that NVIDIA is looking gorgeous, a beautiful chart, you have a problem. When you take a look at the insiders, you have a lot of insider selling here in the month of July. And this has been going on for a while now. And in particular, the CEO is selling as well. Officers. Why is he not coming up? Anyway, here's the insider selling. It's not working properly. A lot of insider selling here on NVIDIA. Do I think it continues to go up? As long as the market does. The thing to keep in mind is that we're at the upper band of an ascending wedge formation. If they blow this through the upper band, don't go chasing it. It's going to come back to earth. It's going to revert to the mean. Don't go chasing it. Here's the automated trend lines. I didn't draw these. This is the algorithm. You have resistance right up here, 176, 177 per share. You may not be getting out at the top, but I would be looking to book some profits up there. If I didn't put in that static stop up there, I would certainly have a trailing stop loss order in on NVIDIA stock. Let's take a look at Amazon. Amazon, to me, looks like it wants to go up. You have resistance up here, 242.59. Let's overlay the Fibonacci sequences. You can see that we broke out here, the week of June the 23rd, retest 1, retest 2, and follow through the week before last. Last week, more follow through. I think we go up higher here. 231.85 price target number 1, 242.59 price target number 2, and then we'll see what happens after that. Now, let's go to the members area. All right, let's go do a refresh. Larry C, BDX, we'll go to you first. Becton Dickinson, weekly time frame. I'm going to keep the fibs up here for a moment. Again, this is just a standard click of a button piece of functionality. I like it. So I like this. This is the type of trade that you're looking at or you want to see for a long-term investment. Let's go to a monthly chart. Hammered, broken support. Let's overlay the trend lines. We haven't hit strong support though. Right here at 156 would be great. So I'm gonna pull my call for an investment here. We are not at historical support. And this could be a bear flag setup. This is what you saw in UNH last week. To illustrate, watch this. UNH. We'll come back to Becton Dickinson. Weekly chart. For those not familiar with what a bear flag setup is, there it is. 1, that's your support level. There's your resistance level. We failed to hold it. This is what I was concerned about and why we sold a good portion of our position, because I was worried about a breakdown below this lower band of support and a close down below $300 per share, would send us down to 270. I think it's probably where we're going right now. Now back to BDX. Back to the weekly chart. Now, the reason why I was a little bit optimistic at the beginning of the analysis is that we hit a support level on a weekly time frame. We consolidated for several weeks. We broke out of a downtrend channel, and we're moving up now. We're going to have resistance right at 184.24. We're probably going to rally all the way up to this 20 period, 15 period moving average. We'll see what happens then. You're going to need a higher low at some point in time. So right now we're looking at a short-term swing trade. Let's see. How do I do this? How do I do this? Let's do it this way. Okay. So I'm looking for a rally up and into a resistance level. Let's do a hypothetical. We rally up to this dotted line here in green to make it optimistic. Green. You want to see a pullback either down to 184.24, a consolidation, and then a continuation move up higher. That way, that's the way you know that that bear market the stock has been in has gone from a bear market to now into a bull market. In short, you're done putting in lower highs, lower lows, and now you're putting in higher lows and higher highs. That's when you get confidence. Right now, all you're looking at is the first leg of a potential bottom on BDX. Do I like the setup? Do I think it's going up higher? Yes, I do. Is it a swing trade? Multi-week, multi-month? Yes, that's pretty much it. Until it shows me it's got the ability to put in a lower high, a higher low, and then a breakout to new higher highs. And then I would add more to my position. To Talon, I got it refreshed. I would have missed a couple of people. I'm gonna go back to Talon in a minute. I'm gonna go in order here so I don't miss anybody. Paul, CLX. A lot going on here. Let's clean this up. We'll add them on as necessary. Very similar story here as to what we just saw on BDX. Huge bear market. We bounced off of a Fibonacci support level. We bounced off of historical support. Let's go monthly view here. This is a pretty nasty sell-off. So the weekly chart looks good. The monthly chart, not so good. So let's get rid of all these. So we broke this support level here in blue in May. Continuation breakdown in June. No new monthly lower low, which is good. We're probably going to rally up to 133.62. This is going to change because it's a rising support level, and depending upon the time it takes to get there, that number is going to change. So I wouldn't write that down. I would just do a print screen. I'll share this out with you. Copy. I'll put that in the chat if you want to save it. Hey, Michael. And that chart is in the chat. Let me know if you don't get that. So I'm worried about the ability to break out and above 133.89. We close out the week at 128.37 weekly view. I think you need a higher low here. I would not initiate a new trade at current. The speculative trade was to buy at support. That's gone now. What else can you do? You could do this. Take your crayon out. Wait for a check back to around 125, a 124 handle. Nibble there. Then as you begin to break out above prior highs, I would add more to the position, but just keep in mind that on a monthly time frame, you have resistance above. Why is that working there? Here. All right, so you're looking at a weekly chart. In fact, this is quarterly resistance above now in dash line. We broke out. That's where your sellers are going to be. That's where you're going to want to book your profits. You can always re-enter if we break out and above this resistance level. So right now, this is a scalp. It's a swing trade. That's it. But I would not enter the trade until I got to check back to a 125 to a 124 handle. I would stay small, and I would add on strength thereafter. ADA. And folks, if you folks have not liked and subscribed to the channel, if you could do that, it really helps me out with the YouTube algorithm. Lee Cable, ADA. I don't know this company. I'm going to keep the trend lines up here. A lot of times I like to begin my analysis with no trend lines. I just want to take a look at it. So we have a clear and defined downtrend. Let's overlay the trend lines now. You had a rejected breakout last week. Let's go to a monthly view. This is way too noisy. A lot going on here. Yeah, this makes sense now. Okay, far better. Far better. I don't know this company and its business. I get the vibe that it's a biotech of some sort, highly volatile. The one public, they destroyed it, as they typically do. But something's happening here. Let's set an alert here. Monthly chart, ADAG. And we'll keep this active. It's a monthly breakout point. So we're going to keep this active for 60 days will work. All right. So our alert is set. There it is. I wouldn't touch this stock until we got a breakout above 220 per share. I'll make a long story short. This has been in a long-term consolidation. You do have a higher low here, and that's why I'm kind of optimistic about it. You bottomed out back here. Nice rally. Pullback, higher, low. Good stuff. If this stock breaks above the pivot point, which is at current at around $4.30, you're probably going up to retest this upper band of resistance, wherever that's going to be at that point in time. But this is like a coiled spring. And if they come out with some good news, this could have a major move up higher. but I would wait to get big on the position until 220 per share. If you want to nibble now, fine. You have great support below. I'd have no problem nibbling, stay small, scratch the itch. That is ADA, AI for George. C3 AI. It baffles me why this company is not doing better price-wise. Let's get rid of all of this. Let's start fresh. Let's get rid of these. We're going to come back to those in a moment. We're stuck in this range. Now, here's the overlay. So the question is, do I want to buy here? The answer is no, because we're trading at current into monthly resistance. I can't buy there. Let's drill down further. Weekly chart. Here's that weekly resistance immediately above. So we're on a weekly chart. I have weekly support here in solid line and resistance up here in solid line, but I also have monthly resistance here as well. It's telling me don't buy. It's knocking on my door, screaming at me, do not buy this stock. Now, that does not mean it can't break out. Sure, it can. It could certainly break out. I would like to see a breakout above this resistance level. If it closes there, I'd nibble. On a retest, I would probably nibble more. On a follow-through, I would add more to the position. So that's my take on C3AI. I would not get big here. I would wait for the breakout, nibble, 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 build your position. Let's go to a daily view. It's not a screaming buy right now. Adobe. ADBE. Let's go to the weekly chart first. You're in a downtrend channel. You can't buy here. Here's your upper band. Here's your lower band of the downtrend channel. Now, could they be setting this up for let's clear this all off. It's driving me crazy. Okay, better. Start fresh. Could they be setting this up for a higher low? Maybe, but that's speculation. So if you wanted to buy this and you're going to put a stop loss right below last week's lows, fine. Stay small. Keep that loss small. Because if it fails, we're coming down here to 326.13. And that's where, in all probability, we're going to end up, because you have a lofty valuation on this market. And I think that at some point in time, we're going to test that support level. So I'm not a buyer here. If you're going to be, fine. Tight stops. Daily view. Daily chart, you have resistance immediately above. And we broke that support level here on July the 10th. Now they're checking it back. I'm not a buyer here. I would avoid this stock. Way too much risk, not enough reward yet. My opinion may be completely different this time next week. I freely admit that. SMR for the lovely Jody. New Scale Power Corp. Infuego. Wow. Oh. Okay. So my take here is that I wouldn't be the least bit surprised for this stock to move 5-10% tomorrow. Am I buying this stock? No. Because at this point, to enter a position at these levels, you're hoping when you should fear. Were I long, would I stay long? I would probably take some profits off the table. I would also use a trailing stop loss. Let the market take you out of the rest of your position because it could still skyrocket up higher. Strong stocks tend to get stronger. I freely admit that. So I wouldn't short this stock, but it is trading into its third standard deviation Bollinger Band. And you can see what happened in times past when that happens. It doesn't end well. You can always re-enter on a retracement. But if it's a longer term investment, you don't want the tax issues, fine, I understand. I'll hold it. But me as a trader, I would be looking to make some profits real here, set up a strategy to have the market take me out with a trailing stop loss order. I would not initiate a new trade here. And if I did, I would have a stop loss in right away. I could have sworn. Franklin, didn't you have URA up here? Or am I losing my mind? I'm going to go over it anyway, just in case. URA. Uranium. I can't. This is amazing. Amazing price action here. So on a weekly chart, I have quarterly resistance above. We almost tagged it last week. Now, I was concerned through this resistance level the last time we reviewed this, but man, amazing. It's just gone parabolic. Just keep in mind you have resistance right up here, 41.50 per share on URA, quarterly resistance. They created this resistance level starting in 2017, second data point 2021, and all of those ended horribly. So I would definitely be looking to book some profits here and make those profits real. If not, use a trailing stop loss order. You can do both. All right, folks, we're over 7:08. Thank you for being here. Everybody have a profitable trading week. Don't forget that TrendSpider discount. Don't use my discount code. Use my link below on YouTube, link above on Facebook and Twitter, and get your 42% off. Go with the yearly because you get a full year. If you go with the 42% discount on the first invoice monthly, that's only 1 month. I think they have quarterly as well. All right, guys, take care. Have an awesome evening. I'll talk to you soon. Be well.